This morning, the fallout continues in the financial world after the failure of two major banks. Now, this crisis, coupled with yet another interest rate hike by the Federal Reserve a few days ago, has some Americans out there wondering if they're going to have anything left for retirement. So joining us this morning to clear up money concerns for Connecticut residents is Tim Baker of Metric Financial in Simsbury. Tim, thank you as always for joining us this morning.
Thank you for having me.
A lot going on with this. So on top of inflation that we're dealing with, now we have these bank failures. First, talk about how we got to this point.
Yeah, it's really unfortunate timing. So we're right in the middle of the Federal Reserve hiking interest rates a bunch to try to offset inflation. Personally, I think this is pretty much a direct offshoot of that. So the Federal Reserve has raised interest rates so much, you're having some of these banks struggling to refinance some of their debt. Silicon Valley Bank basically was the first one that started it all, and they tried to do a stock issuance. That failed when everybody figured out that they were going to be insolvent. Then Signature Bank, then First Republic Bank, and now you're starting to see it spread overseas as well.
So we've heard so much about the bank failures. The big question this morning, where do things stand right now, and where do we go from here?
Yeah, so the big question I have is what happened to all the stress tests, right? After 2008 and you had the global financial crisis, the Federal Reserve put in place all of these stress tests for banks' balance sheets, make sure they're well capitalized. And so why wouldn't a huge interest rate hike from the Federal Reserve be part of that stress test? So that's having a major impact on all these balance sheets, and we're finding out right now whether these are bank specific or if they're more systemic to the system. I don't know that we would say it's system wide at this point, but it definitely has not been isolated to Silicon Valley Bank and Signature Bank. Credit Suisse has had their problems. In fact, some are arguing Europe has it worse than we do.
And you mentioned those interest rate hikes. There were some questions about whether the Fed was going to pursue another hike. How does that factor into this? Why did they ultimately do that?
Yeah, so unfortunately, everybody thought these problems with the banking system would get the central banks to lay off raising interest rates, because if you have banks that are poorly capitalized, they're going to shore up their balance sheets by not lending as much. So that should accomplish central bank goals for them. But the ECB came out right in the middle of all of this and raised interest rates 0.5%, and then the Federal Reserve came out and said we're going to raise 0.25%, and we're not changing our ultimate target, which means there's going to be at least a couple more rate hikes coming this year.
So much uncertainty surrounding this. People watching at home, investors, they want to know what they should be worried about, what they should not be worried about. Break it down for us.
Yeah, I mean, listen, it's, my view is like anything else. I mean, this is probably going to wind up being a distraction. I think ultimately we're going to get back to figuring out whether or not the Federal Reserve's rate hikes are actually going to break inflation. We tend not to get too upset about day-to-day noise. We certainly don't know for sure, how widespread this is, as I just mentioned. So we're keeping close tabs on it, and we'll keep watching to see how widely this does spread. But we're telling people just focus on your goals. If you're retiring in 5 years, this shouldn't change whether or not you're retiring in 5 years. Keep your saving program in place. All of those things. As far as things people could change, it's always a good time to consider the expenses in a portfolio. We always at Metric we would always trade mutual funds for exchange traded funds, and we're always happy to talk to folks about that.
And then this situation, looking at the bigger picture here, really raising concerns about the economy. Where do we go from here? Recession popping up once again. I think Goldman Sachs actually raised their percentage of America heading into a recession in the next 12 months after the bank failures. What's your take on that? Where do we stand?
Yeah, recession's become difficult lately. So recession is basically, technically speaking, it is 2 straight quarters of negative GDP growth, which we actually had last year. The challenge is when you have such hot employment, right? Unemployment rate is very low. Wage growth has been very good. So ultimately, it's difficult to say just because GDP goes down, does that necessarily mean we're in a recession? But what I do tell people all of the time is be very careful about equating a recession with anything happening in the stock market. The S&P 500 is still down about 17 or 18% from its peak at the end of 2021. So to say that going into a recession will necessarily impact your investment portfolio is not a guarantee.
Super complicated, which is why we brought in the expert. Tim Baker, thank you so much, man.
Thanks
I
for having me,
appreciate it.
Angelo.
Of course.